Hey, this is Sasha, and welcome to another episode on Hungry for Returns. And this is where I like to share with you my own personal knowledge and insight about trading and investing on the stock market. So if you have a question that you want answered by video or audio, then be sure to submit maybe a video or audio question on our website at tradersfly.com, and you might actually hear yourself speak here on one of the episodes. Now, today's question is a very common question that I get, and that is regarding technical analysis, or looking at charts, in other words, versus fundamental analysis, and which one is better, right? And I get this question quite a bit because some people are unsure. Do I focus on the charts? Should I look at the charts, or should I look at fundamental analysis when I'm analyzing a company, or do I need to really do both? Really, the simple answer for you is that you could choose one or the other. But if you're more of a short-term investor, you'll probably want to look more into the technicals. For long-term investors, you'll want to look at the fundamentals. So the reason for that is because when you look at a fundamental analysis, you're really looking at company earnings, you're looking at how the company is doing. It's the underneath surface of those fundamentals, the foundation of the company. And it takes a long time for a company to change the way that they do things, right? It's a slow moving process. It's not just linear and fast. It's sometimes you go 2 steps forward, sometimes you go 2 steps back, 3 steps forward. And it's this, little motions that you have to play with to be able to make progress. Now, if you're into more day trading, 30 to 60 day trades, 90 to 120 day trades, you'll probably want to stick here. So this is more for day trading, swing trading, option trading. You'll probably want to stick way more to the technicals because a company just can't make products quick enough, make changes to thousands of employees quick enough, and totally turn the boat around when it comes to the fundamentals. Now, here's one thing my mentor always said. So if you're looking at which one is better, technicals versus fundamentals, is that stocks that have great charts usually have great fundamentals, and stocks that have bad charts usually have bad fundamentals. So the other way also, if you look at it, it's also true. So companies that have bad fundamentals are probably going to have bad charts, and companies that have great fundamentals are probably going to have great charts. They usually go hand in hand. So if you look at the technicals, they'll probably kind of equal the fundamentals. Okay? That's a general rule and guideline. It's not always the case, but it's just, in general, this is just what typically happens. Now, there is one big caveat to that, and you got to remember this concept, the short term versus the long term, right? And that is when people are trading based on fear or emotions, when basically, people are in a panic. Well, now, what do we trade on? Well, panic traders trade on the technicals. And that is when you're in a panic mode, the fundamentals just don't apply. You're just trying to get out, and you basically just say, hey, sell, 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 and you need to get out of that stock and position. So this is what happens, is that when there's fear, emotions, panic that sets in, usually they're focused and hitting based on technicals. So technicals do dominate, or in other words, trump fundamentals, especially in shorter term trading. But in general, they go hand in hand, where technicals do pretty much equal fundamentals, and they're kind of one and one. Whichever one you want to use is totally up to you, but I will say that if you're looking for a very long outlook, you could use either charts or fundamentals. Now, if you're in a shorter term time view as a trader, you probably want to stick to more technicals, because as I mentioned earlier, it just takes a long time to turn that boat around. Remember that the markets move. They don't move based on the technicals. Markets move based on fundamentals. Okay, and why is that? Well, they do so because we're looking at company growth, company earnings, projections, investments, right? So they move actually based on the fundamentals, but the fundamentals are a reflection in the technicals. So think about that for a moment. They're moving because of the fundamentals, not because of the technicals, but in general, they go hand in hand. So what you choose to make your investment decision is totally up to you. You could go, hey, fundamentals, but usually that's for the longer term investors. you could go with the technicals, but usually that's more for 30 to 60 day, 120 day, could be 10 minute day, trades. Really is up to you. You can even use it for longer term trading, but usually short-term traders use technicals, or very active traders. Longer-term investors, maybe that are not in the markets as often, will go ahead and look more at the fundamentals. But they usually go hand in hand, and of course, the markets move based on the fundamentals. So I hope this makes a little more sense and clear that, hey, don't say, hey, one is better than the other, because they're really not. They're just, one is a reflection of the other. They go hand in hand, and like I said, if you have great charts, you'll probably have great fundamentals, or if you have bad charts, you'll probably have bad fundamentals. And if you have great fundamentals, you'll probably have great charts. If you have bad fundamentals, you'll probably have bad charts. So they go hand in hand, and it's just a matter of personal preference, your trading style, and what you like to look at and evaluate stocks and investments by. So thanks for joining me in this week's lesson. I hope you enjoyed it. And if you did, and you want to take a look at our website or even submit a question by voice or writing one in, then be sure to do so at our website at tradersfly.com, or you can do so right there on our, by clicking the link right over here. Thanks again. And remember to do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.